A silent illusion. The money in bank accounts doesn't actually exist. This is not a joke. And no, it's not a conspiracy theory. If tomorrow morning everyone woke up and went to their bank to withdraw their money at the same time, the system would collapse within minutes. Because that money is not real. This is not a mistake, not a loophole. This is the system itself. A system so old, so deeply rooted that we've come to see it as normal. Its name is fractional reserve banking. And this system is the silent engine behind global debt, inflation, and the illusion of wealth that isn't truly real. Once you truly understand how it works, you realize this. What we call money is not something you can actually hold. It is built entirely on promises. To understand this, we need to go back in time, to a period when money was not just numbers on a banking app. In medieval Europe, money was gold and silver. If you were wealthy, you had gold in a chest, or jewelry you could trade. But carrying gold was dangerous. Roads were unsafe. Thieves were everywhere. So people found a solution. They handed their valuables to goldsmiths, men who had locked vaults. And what did the goldsmiths give in return? A piece of paper. On it, a simple note. If you bring this paper back to me, you can reclaim your gold. And then people realized something important. They could use this paper instead of the gold itself. After all, that simple piece of paper represented the same value as the gold, and it was much easier to carry. This is where everything truly began. The goldsmiths discovered something else as well. Not everyone came to claim their gold at the same time. If they had 1,000 customers, maybe only 10 or 20 would show up on a given day, which meant most of the gold just sat there untouched. And then an idea appeared, a very dangerous idea. If they had 100 gold coins in their vault, they began issuing receipts for 200. They lent these extra receipts out, charging interest. They were making profit from gold that didn't exist. No one noticed, because as long as everyone didn't show up at the same time, there was no problem. This was creating gold out of thin air. This wasn't just a small trick. It was a revolution. The moment people accepted paper money as real value, money broke free from physical reality. This is how banks entered our lives. And later, governments embraced the trick. In 1694, the Bank of England was founded, but not for the people. The British Crown was suffocating under war debts. It desperately needed money. The bank lent money to the government that it did not actually have. And what did the bank receive in return? Interest. And how was that debt repaid? Not with newly conquered lands, but with money taken from the people through taxes. Does this sound familiar? Because even today the system works the same way. Money that doesn't truly exist is borrowed, and the bill is collected from our children, and even their children. America followed the same path. Banks issued banknotes backed by gold, but soon they realized something else. They could print more money than the gold they actually held, and then bank runs began. People panicked and demanded their money, but the vaults were empty. Banks collapsed overnight. So was the system abolished? Of course not. It returned even stronger. Central banks were created, and the message was clear. Even if the money doesn't exist, we will make sure people believe that it does. And now, let's come to today. This system has grown larger than ever before. So you might ask, is this where the story ends? No, because the real story is hidden in how the system works today. Money created from debt. Now stop. For just a second, look at the world we live in today. You open your phone. You see numbers inside an app. And as you keep looking at those numbers, you think this: these numbers are my money. But is that really true? That money is not the kind of money you think it is. Most of the money you see today is not money printed by central banks. It's not paper cash. It's not reserves. It's bank money. And bank money is created as debt. Let's make this concrete. Let's say you go to a bank and deposit $1,000. In your mind, this is what you believe. My $1,000 are sitting safely in the vault. But is that true? In reality, the bank is only required to keep a very small portion of it. In the past, this ratio was 10%. That means the bank would keep $100 and lend out $900. That $900 goes into someone else's pocket, gets spent, and is deposited into another bank. That bank keeps 90 and lends out 810. This process continues. The result: your original $1,000 turns into roughly $9,000 to $10,000 circulating inside the system. But be careful. Of that money, only the first $100 was real. Every remaining cent was debt. And now, let me tell you something you won't like. The system I just described to you is outdated. Today, especially in the United States, banks' required reserve ratio is 0. Yes, 0. Since 2020, banks are no longer required to hold a single dollar in their vaults against the deposits they receive. So a question naturally comes to mind. Then why don't banks just print infinite money, like in La Casa de Papel? The answer is simple, but unsettling. Because the chain of the system is now located somewhere else. That chain is called the Basel Rules. These are rules written in Basel, Switzerland, by central bankers and regulators. They were not elected. They received no votes. Yet they shape the banking system of our entire world. These rules say one thing very clearly. The more risk you take, the more of your own money you must put behind that risk. If a bank issues risky loans, it must have a capital buffer from its own equity. This is the only real physical limit that can restrain banks today. But something critically important has changed here. In the past, banks lent money from deposits. Today, banks issue loans and deposits are created afterward. When you take out a mortgage, the bank does not pull money out of a vault. It types numbers into the system, and at that moment, new money is born. That money exists because you agreed to go into debt. In other words, money is created by your signature. Only afterward does the bank look back and ask, do we have enough capital to carry this risk? Money comes first. Controls come later. That's why today more than 90% of the money in circulation is not central bank money. It is bank money, money created from debt. And because of this, every financial crisis begins the same way, with a crack in trust. Because when debts can't be paid, the money disappears with them. This system has 3 unavoidable consequences. First, inflation. As banks multiply the same money over and over again, the value of each unit declines. Prices rise not only because of supply and demand, but because the currency itself is being diluted. Second, perpetual debt. Because money exists as debt, there is always more debt in the system than money available to repay it. Interest ensures that this gap can never truly close. Someone always has to borrow again or collapse. Third, concentration of power. Banks collect interest on money they never truly had. Governments finance wars, crises, and bailouts through the system, and those who own assets grow wealthier with inflation, while workers stand still. So what happens when this wheel stops? 1929. The Great Depression. Banks collapsed. People couldn't withdraw their own money. 2008. The housing bubble burst. Debts went unpaid. The system was on the brink of collapse. What did they do? They printed trillions, because there was no alternative. If this game stops, the modern economy stops. And here is the most disturbing truth of all. This system cannot tolerate you being debt-free. If everyone paid off their debts, money would disappear, credit would stop, the economy would freeze, which means you are the liquidity of this system, and at the same time it's collateral. So what's the conclusion? This: money is not wealth. Real wealth is land, knowledge, skills, production, and independence. Debt is not neutral. Inflation is not an accident. They are all part of the design. This is not a doomsday narrative. It is a state of awareness, because once you recognize what truly exists, you can begin to protect yourself, ignore it. And you remain part of the game. And remember, this story that began with goldsmiths has not ended. Only its scale has grown. And every crisis whispers the same thing. This system is not built on gold, but on trust. And trust is the easiest thing to lose.